Let's start with December 2024, part C. Question 1, part C. December 2024, question 1, part C. It has how many marks?
It's budget information.
Pardon?
Okay.
That's
So
12 marks.
It has 12 marks. We are told to prepare Tayara's statement of areas of revenue as at 30th June 2022, based on the information provided above. So we have the information here. We need to analyze and see how we can really come up with statement of areas of revenue. I am going to explain the upper part, but I want you first, I am going to go through the questionnaire. I want you first to know what is areas of revenue before you read the case study. You get it?
Okay. Okay.
I'm going to explain, but you need to first know what is areas of revenue that they need. Okay? So as you try to get areas of revenue, assume these areas of revenue is represented by, let's say our D represents the areas of revenue. The areas of revenue at their end. Now, to derive your D will be equal to, as you're trying to get your D, you are going to get A plus B, then minus C. And now where let's say A represents where your A represents the revenue areas. The revenue areas at the start of the year, what you started with. Then B represents our revenue billed or invoiced. Our revenue billed or invoiced during the year. Then C is going to represent your your revenue collected during the year. So if you know this, it will really help you to prepare the statement of areas of revenue. That is like the closing balance. So you need to know at the start of the year how much was still outstanding. This is A is still the revenue outstanding at the end of the year. The revenue you had not yet collected at the start of the year. Then B is that during the year, obviously, as an entity, you may have billed, you may have invoiced. Okay? Invoicing doesn't mean that you collect the money immediately. It could be on credit, it could be on a cash basis. So B is what you really invoiced, the revenue you invoiced or you billed during the year. Then what did you actually collect? What did you actually collect during the year? So if we look at the outstanding at the year, at the start of the year, and we add what we invoiced, then minus what we collected, we will be in a position to get our areas of revenue at year end. That is like the uncollected revenue at the year what? At the year end. So if you know this, really, it is going to help you as you analyze your question. So let's see Let's read through now. Let's read through. We are told that as part of on-job training, management of Tayara has organized a training session for the new staff in the finance department. The training will focus on, among other aspects, a preparation of financial statements and all schedules to be submitted to the Accountant General by the end of the financial year. As the lead trainer, you have been provided with the following information as part of the training materials to help the trainees understand the subject. Okay? In the year 2020-2021, Tayara City Council had low revenue collections due to the economic downtime caused by COVID-19 pandemic. Okay, there was, however, an improvement in the revenue collections during the year to 30th June 2022. So we have the information as an extract from the revenue reports. You have, these are revenue, this is the revenue. Whatever you have here is part of your revenue, what the entity actually, what the entity received. But the source of the revenue for the entity are these ones. These are the sources of revenue. You have rent and rates, non-produced assets, rent and rates, produced assets, local service tax, land fees. So these are sources of revenue. But you have the budget. The revised budget for the year 2020-2021. This is the revised budget of the previous period. You have the revised budget of the previous period. This was the what? The budget, what you expected to correct. Then you have the percentage collected in 2020-2021 as per the budget comparison statement. So you have the percentage of the amount of money you collected. You had budgeted that as an entity, we are going to collect this as our revenue. Okay, this was your budget. But the year ending, you had collected this. This is your what? These are your percentages. You collected this. So it means that if the percentage is not 100%, it means that the remaining percentage is the uncollected. It is the percentage that represents the amount of revenue that you didn't collect. That is the area. So you have the budget for the financial year 2020-2022 and also the corrections. You have the corrections in our period, in our 2021-2022, but you have the budget. So it means that it is from this budget. This is like, actually, if this is your current period, this budget is drafted from what you invoice, from what you bill, okay? So this is, for example, what you bill and what you build during the year based on your budget, and this is what you collected, okay? As a matter of practice, Tayara issues a demand notices for invoicing the citizens as per the details of the assessments of the revenues provided. While drafting the what? While drafting the revenue budget. So as you draft your revenue budget, you also go ahead and issue the demand notices. All the demand notices for the each of year were issued as required. Were issued as what? As required. So is this really hard question? Is it a hard question? If you really know what you're doing and what a statement of areas of the revenue at the year end means, then this becomes a simple question. So for you, what you're going to do, as we answer this, we can simply say the Tayara's the IRS statement, the IRS statement of areas of revenue as at the 30th June 2022. Okay, so here I'm going to put my details or sources of revenue, my sources of revenue, or you can start with the details. Then under details, you have your sources of revenue. Okay. Then, because we want areas of revenue at year end, as I told you, you're getting A plus B minus C, then you'll be in a position to get D. Okay? Because here, when you use A, B, C, and D, make sure that you have defined them in an exam. Okay? So, we can keep our figures, shillings. Let me see our figures. We can keep our figures in a thousand based on the question. We can keep our figures in a thousand. Okay? So we can say shillings in a thousand. Now, let me first draft the sources of revenue. You can first capture all your sources of revenue as per the question. As per the question. Perfect. Perfect. Now, after this, what you're going to do is see whether you're given A direct, whether you're given B direct, whether you're given C direct. So you read the case study. If you're not given this, you look for them. From the question, are we given A? Are we given A? Remember, A represents what? A represents, are you seeing
Arrears.
the areas, the revenue areas at the start of our year, at the start of this year that we are dealing with? Do we have the revenue that we had not yet corrected in the previous period? Because any revenue you don't correct in the previous period becomes the revenue areas at the start of the year. It becomes the revenue areas at the start of the year. Any revenue you don't correct in the previous period becomes the revenue areas at the start of the year. Now, when you look at our previous period, it means that you are going to base on this information. This is the revised budget of the previous year, and you are given what are next corrected in terms of the percentage. So we can do the working. We can simply do the working. I am going to do the working here. To help me to determine A, I needed to determine what? I needed to determine A. So if I'm to determine A, this is, let's say, working one, and I want to simply determine the revenue areas at the start of the year. I want to determine the revenue areas at the start of the year. And what am I going to do? Allow me to just simply class. When you're using Excel or computer, it really becomes easy. But in an exam, you're going to realize that we take time trying to again type these things. So I can just copy I just copy these things here that I have already typed. Then after copying my sources of revenue, you see that we are given the revised what? We have the revised budget. We have the revised budget for the year 2020, for the year 2020, 2021. We have that revised budget. Now I can simply create a column for the percentage of arrears. In the question, I have the percentage of correction. Because I'm interested in the revenue areas, I can simply get the percentage of revenue that was not corrected, the revenue areas, so that it can help me directly to get the A. I want to get the A, that is the revenue areas at the start of the year. This will be my A. So if you know this, really, it becomes easier. So when you look at the question, we are given the revised budget. So you just copy the figures the way they are. You copy these figures the way they are, these ones. You copy them and have them in your table. So that is our revised budget. What about the percentage of the revenue areas? I simply get 100 minus the percentage of revenue correction. This is the percentage of revenue correction. Like in terms of rent and rates for non-produced assets, we corrected 100%. So there we don't have any remaining percentage that is uncorrected. But here, if you corrected 44%, it means that the remaining 50 what? The remaining 50 what? The remaining 56, isn't it? The remaining 56 is a percentage of revenue areas. If you corrected 64, if you corrected 61, the remaining percentage is uncorrected. So you simply get the difference. So here we don't have any percentage of revenue areas. You are not demanding anything. Then here you're demanding only 56%. Then here you're demanding 39%. The difference between what you corrected, the difference between 100% and what you corrected. Here you're demanding 20% because you had corrected 80. Here you're demanding 15 because you corrected 85. Then here you're demanding 45 because you corrected 55%. Then here you're demanding 70% because you corrected what? Yes, because you corrected 30%. Then here you're demanding 8%. Because you corrected only 90 what? 92. You corrected 92 when you look at our question. The entity managed to correct 92. So it means that the 8% is the revenue areas. So how can I get A? For me to get A, it is simple. I simply multiply. So here it will be 0 because you're getting this figure multiplying by 0. So you get 0. You don't have any outstanding revenue. What about here? You get this figure times the 56%. And that is the revenue areas at the start of the year. So these are my figures. So after this, I simply pick and paste. I bring these figures here. This will be your working one. This will be from your working one, where you're simply copying these figures that you have calculated. You have calculated. And you put them here. Okay. I believe that is okay. Another student, as we get this, another student could be based on this, whereby you rely on the percentage of correction, percentage of correction, and then you get A. But when you're getting A, it will be the revised budget minus what you corrected, minus the revenue, minus the revenue corrected. But this approach takes a lot of time. Like you first get the amounts, the revenue you corrected here. And after getting the revenue you collected, then you go ahead and after getting the revenue collected, you go ahead and get your A. But this approach, the first one is really simple. It is really simple. It doesn't take time in our exam. This one takes time because you'll be using your calculator, getting this figure minus this, then to get this. It really takes time. It really takes time. Any question? Are we okay? Are we okay on how we get A? Are we okay?
Yes, I am okay.
Okay. So B, are we given B? Remember B is what? B is the revenue billed or invoiced. Remember, whatever you are budgeting in the current year, you really invoice. That's why they are telling you that as we do the revenue budget, we also issue the demand notices for the invoicing citizens. And they are telling you that all the demand notices for each year were issued as required. So whatever I am seeing here, whatever I'm seeing in this column, this is budget for what? Whatever I'm seeing in budget 2021, 2022. Whatever I'm seeing in this budget 2021, 2022, it means that this is what I invoiced. In this 2021, 2022, in our current period, it's what I billed. It's the revenue billed or invoiced. So I simply copy and paste. This is what we invoiced. Then what about C? C is what? C is what we corrected, the revenue corrected during the year. What you managed to correct during the year. Remember, as you correct, you may be correcting what was outstanding at the start of the year, or you may be correcting part of what you invoiced during the year. So simply copy and paste these corrections. So that is our C. Just simply you pick the figures from the question. You pick these figures from the question. Then how can we get D? Already you have told the examiner that as I get B, I simply get A plus B minus C. So that's what you're going to do. You're getting A plus B, then minus C. That's what you're doing. And the D is what you have not corrected at year end. This is the amount of money. This is the uncorrected revenue as at year what? As at year end. And the colleagues, we are done with this. We are done with these 12 marks. We are done. These are 12 marks, clean. But at times you see, not everyone will be knowing how to get areas of revenue. Not everyone will be knowing that. At times you look at the statement of areas of revenue and you feel like, what's this? You don't know where to start from. especially if you have never heard about it. That is the problem with this paper. But really, we are done with these 12 marks. Okay? Any question? Are we okay now with this?
Yes, me, I'm okay.
Yeah, it's okay. It's okay.
Okay, so still the same year. Still the same year. You have question 2. Please master the theory about the budget. Master the theory about the budget. It will help you. Now, part B, it was about the budget execution. Then part C, it was about the procurement. It was about the procurement. Me, my focus is on part A. My focus is on part A, and I want to clear these marks. I want to clear these marks. They are telling us that by identifying, by what? By identifying the components of financial statements that are affected by the above transactions, show how the transactions affect the financial reporting requirements in accordance with the relevant IPSAS. Do you know the components of the financial statements? Do you know the components of the financial statements before we look at the case study? Do you know the components?
The statement of financial performance.
Just a minute. The components of financial statements. These are what and what. Just first to remind ourselves.
Statement of financial performance.
Statement of financial performance. Then next.
Statement of financial position.
Statement of financial position. Then next.
Statement of cash flows.
Statement of cash flows. Then next, because have we discussed
net assets?
You guys, have we discussed the whole of cash flows?
No, we did only one.
No,
direct method.
We didn't do indirect method.
We did indirect.
No, we didn't do
direct.
it. We discussed direct. Okay. Please, we needed to master the cash flows. You never know in our paper, eh? So I am going to discuss also the other part. Then we have another component is what? Statement of what?
Changes in net assets.
Statement of changes in net assets. That is like statement of changes in equity. Then next, you have statement of budget performance.
Yeah.
Then next, you have the accounting or the notes. You have these accounting policies and those explanatory notes. Okay, so those are some of the components. What about the elements? Because this is a discussion. What about the elements? The
elements you have the assets, liabilities.
So we have
expenses.
the assets. You have the what? The
liabilities. Expenses.
You have the expenses.
Revenue or income.
You have revenue or income. You have net asset components. So those are some of the elements, but you need to be in a position to explain in an exam. You must be in a position to explain what each means. What each means in an exam. So for us, really, I really don't want to go into much this. Let's read the case study. What are we told in our case study? In this case study, in this question, we are told that during the year to 30th June 2022, the Ministry of Disease Prevention and Control declared an outbreak of Ebola virus disease in Uganda, following confirmation of a case in one of the districts of the central region. During the period, MDPC held several crisis management meetings in order to establish an action plan for management and control of the disease. No budget had been allocated for this disaster as it was not expected to occur. There was no budget, okay? Through the government of Uganda development partners, additional funds. Please read the statements carefully. Always know where the money is coming from. Remember, in the question, we are doing what? We are trying to account for this transaction. How will this transaction affect our financials? How will these transactions affect our financials? So we are told that through the government of Uganda development partners, additional funds amounting to shillings 2.296 billion were allocated and transferred to an entity called the MDPC to be specifically used to prevent and control the what? Control the disease. This money was utilized as follows. You have the expenditure items. These are the expenditure. What are the expenditure items? You as an entity, you incurred money on these items. This was what was allocated. You as an entity, you had allocated this from the money you received. You received 2.296. This is what you received as an entity, and you managed to do the allocation that this money is going to be allocated to this expenditure item, case management and treatment costs, infection prevention and control. These are what? These are expenditure items. But this is what you allocated. But the actual expenditure, the actual amount of money you incurred by the year end was this. Please recall that the money you're given, the money that you were given, it was specifically to be used to prevent and control the disease. Okay? Let's look at another paragraph. They are telling us that the ministry is required to make its approval budgets publicly available. The above funds, please take note that the above funds must be what? The above funds must be returned to the development partners in case they are not what? In case they are not utilized as per the transfer agreement terms and conditions. If we give you money and you don't utilize it, please return. Please do what? Return. And you can see that the entity managed only utilize this. There is a balance. There is unutilized, we have unutilized funds. We have unutilized funds. So the accounting officer has requested you to advise on the adjustments to be made in the financial statements in the respect of what? In the respect of this grant. MDPC prepares its financial statements on what? On accrual basis in accordance with the IPSAS, International Public Sector Accounting Standards. I am not going to waste time reading this last paragraph. It was there just to ask you the theory question. I'm not going to read it through. So now you see it is really an exact number, but at times we fear. At times you fear. How many standards do you see in this scenario? How many standards do you see in this scenario?
Is it 24? IPSAS 24.
That is about presenting budget information in the financial statement. Yes.
23.
There is
revenue from non-exchange transactions.
And what?
Revenue from non-exchange transactions. 23.
That is IPSAS 23.
Then is IPSAS 1.
Which is now actually part of IPSAS 47. Remember, those things were merged. So it is IPSAS 47. The IPSAS 9, the IPSAS 24, IPSAS 23, those ones were merged to form one IPSAS 47. Okay. Now for this, of course, we have those are the only IPSASes we have. IPSAS 24, IPSAS 23. What about IPSAS 1? Presentation
I
of
mentioned 1. IPSAS 1, presentation of financial statements.
All right. So what we can do, of course, in an exam, you're going to really write something. Yes, there are 7 marks, but you're going to write something and talk about these standards. We can simply say that this is December 2020 what? December 2024 question 2 part A. Now I can first talk about the grant that we received, and I can say that the transactions should be accounted for in accordance with IPSAS. IPSAS what? IPSAS 24, which is about what? Make sure that you name IPSAS 24, which is about presentation of budget information in the financial statements. Then another IPSAS, that is IPSAS. Are you seeing my screen or you're seeing the question?
We are seeing your screen.
Then we have the IPSAS 23, which is about the revenue, accounting for the revenue from non-exchange transactions, those are taxes and transfers. Then and what? So this is here we are accounting for the grant. This is where the grant will be a conditional grant. This is our conditional. We have the conditional grant. Then and what? We can say and IPSAS IPSAS 1, which is about presentation of the financial statement. Okay, now after that, now you can say that because let's start with the grant. We can say that we can really say that in IPSAS, we can say that IPSAS 23. Okay, let me start. Yeah, let me start with IPSAS 23. Because I have already named the IPSAS 23, I don't need to again name it. I can say that IPSAS 23 requires, or I can say as per IPSAS 23, the ministry should do. We are accounting for that grant. The ministry should initially recognize the conditional grant received from this development partners. From these development partners as follows. So you need to recognize this as follows. We double entries is what you debit. If you receive grant, what do? You debit what? You credit what? This is cash. This is not an asset. You're receiving a grant in the form of money. It is not an asset. Okay, it is an asset.
So debit cash or bank?
So for us, we are not recognizing the PPE, but we are recognizing the cash received. That is cash or what? Cash or bank, depending on the mode. So we are recognizing how much shillings we received, 2.296 billion. So I can say 2,296 million. Then you credit what? Isn't it a liability here? This is what? Isn't it a financial liability?
Financial liability.
That is deferred what? Deferred income, which is part of your liability. It's not really an income it's an income per se, but you can only recognize it as an income as part of your revenue when you have satisfied the condition. That's why you're calling it deferred income. It will be part of your other incomes. It will be part of your realized amount once you satisfy the condition. But initially, you recognize it as a liability. So this is 2,296. Okay. Then what happens subsequently? Because this is at the time, that is at the date you received the money. In your books, this is what you did. What about subsequently? Okay. So subsequently, the ministry should, because they utilize the money. When you look at our question, the entity utilized the money. It's part of the money. They utilized the part of the money. They utilized this money. So the money you utilize, you recognize it now as your actual revenue. You recognize it as your actual revenue. You get? So we can say that subsequently, the ministry should recognize the what? What can I say? Should recognize revenue. Should recognize revenue. Should recognize revenue of shillings. How much? 1,600. 1,600 to this one. Now we have to write 1,600,508,075. As you recognize revenue of this in the respect of the what? In the respect of them as in the respect of the money of the amount spent from the conditional grant. You are recognizing this in the statement of what? In the statement of a financial performance. But when you recognize this as revenue, go ahead and remove the other liability. So we can say with what? With the associated what? Or with the corresponding reduction of deferred income in the statement of what? Where do you find the deferred income? This is a liability.
Position.
In the statement of financial performance.
Position.
As below. Okay, here you can say the double entries is what you're debiting. You are debiting the liability because you want to reduce the liability. So we are debiting the deferred income. That is like your financial liability of shillings. That amount of money. Then you're crediting. Now you recognize the real income. That is, you credit the revenue. The revenue, that is the revenue from non-exchange transaction. You're recognizing the revenue from non-exchange transaction, and that is what? Your conditional. You can now go ahead and recognize it as your actual amount in your books as revenue. Okay? Okay, so this is what that's what you do. Are we together in this point?
Yes.
So as for our question, this one must be. Okay, do we have the remaining balance? Yes, we have the remaining balance. The unspent, how can I call it? The unspent?
Yeah, unspent amount.
We can say the unutilized. The unutilized amount of how much? of shillings, how much? The balance. You do the computation, that is how much the balance. That is when you get what we received minus this, what do you get? That is 669,491,250. So you tell the examiner how you're getting. You're getting this 2296 billion minus 1,626,508,750. So that's how you're getting this. So this amount, the unspent amount of this should be recognized. Should be recognized as it is still a liability, it is still recognized as financial liability, which is like part of your deferred income. So this should be recognized as your deferred income. In the, yes, please. Yes, please.
Why don't we just put it straight as a payable? Because they are saying that whatever you don't use, you pay it back. It means that they can't use it again in the next period. You can just say as a payable, which will be paid back and added to the financial position.
This can't be a deferred income. It will really be what? This will be a financial liability, but in the form of what? Payable. Stature.
Yes.
Payable. But yeah, payable, because we don't know whether they have already whether they have already returned it back, or whether they have refunded already. So we can say that it is, thank you for that. It is no longer the what? It's no longer the deferred income, but a payable. You have an obligation to clear in the statement of financial position. Because here you have to refund. You have to refund. Now, before you do the refund, it means that what are you debiting? What are you crediting? Okay, what are you doing here? First of all, you derecognize, you remove the deferred income. You debit your deferred before you pay. We are clearing that deferred income of shillings. We debit the deferred income of shillings. Now we are switching the account.
9
is 200.
491,250.
We credit the payable. We credit the payable. Now these ones become our trade payables. We have to clear them. This is before payment. This is before you refund. Then at the time of refund, once you refund, once money is refunded, once money is refunded, once money is refunded, what do? You debit what?
The payable.
Once money is refunded, you debit. Now you remove that payable. You debit the payable, which is shillings 66. This 491 to this, and you credit what? The cash. You credit the cash or bank. This you refund the money. Okay. And now you are done with you're done with everything about IPSAS 21. So the IPSAS 23. But the fact that we have the budget in the question, the fact that we have the budget, the allocated and the amount spent, then we can as well write something about, we can as well do the IPSAS what?
24.
The
24.
IPSAS 24. So we can say that in accordance with IPSAS 24, this entity, what is the name of the entity? Let me just say the ministry. The ministry should present the budget information with actual expenses incurred in the statement. In the statement of what? In the statement of, we can say in the statement of budget performance, in the statement of budget performance. Or it can be in the statement of appropriation. In the statement of appropriation. It can be in the statement of appropriation for the year ended 30th June 2022. As indicated. So we needed to prepare our statement. What is the name of this entity? What is the name of this entity? This is the ministry, MDPC. We can say that MDPC's statement of financial, statement of budget performance for the year ended 30th June 2022. So you have the details or the details for the budget items, the details. Then you have, as you do this, you always need the initial budget. You always need to look at the adjustments. Look at the adjustments. Then you look at the final, you look at the final budget. Then look at the actuals. Then go ahead and look at the variance. Okay, so we are doing all this in shillings. We are doing all this in what? So as you do this, your details are like your budget items, your budget what? Your budget items. So you have the revenue. This, of course, whatever you do, you need to know that you need to start with revenue. And part of the revenue you have in this question, the revenue we have is only the conditional what? The conditional grant. Then you can go ahead and look at the expenditure items. From the question, you list those expenditure items. When you look at the question, the way it is designed, the way it is given, we simply have the amount that was allocated. Initially, we had no budget for these items. So it means that you had no initial budget, okay, for these things. There was no initial budget. Even when it comes to the conditional grant, you had no budget. Even for this case, what? There was no initial what? Initial budget. But during the year, you received the grant. You received what? You received the grant. The grant was how much? You received the money. It was how much? You received the, you guys are still listening to me. You received the 2296. This is the money we received. What about in terms of the budget? Out of what we received, we made allocation. So that is the budget you're making now. You are allocating the money you received. Now, when you go to the question, you see that you're allocating, what? You are allocating this. You are allocating this. So this is part of what you're going to put in your adjustment. Is what? When you add, is it the same? This, maybe, have I skipped something? This is the total expenditure based on the allocation. You allocated all the money you received. And the total expenditure is what? You see that for you, we are saying that the total expenditure is going to be this. Eh? Then from there, the final budget means that the final budget you're getting the initial budget plus the adjustment. The adjustment could be that you're adding or you're reducing the budget. But now we are increasing the budget. This adjustment column could be that you're reducing the budget or you are doing what? You are increasing the budget. So here you simply put, you can simply copy and paste. What about the actuals? What about the actuals? What are you going to do with the actuals? How much did we actually spend? How much did we, okay, sorry. How much did we actually realize in terms of the revenue? How much did we actually realize? How much did we manage out of the revenue? This, we are recognizing how much as our revenue from what we managed it incur. Isn't it? Okay, you can start from
1626.
We have that figure here. We have that figure here. So the actual revenue is not this. The actual revenue can't be this. So your actual revenue, the one that you are going to recognize as your actual revenue, will be 1,162,6,528,750. It's what you're going to really capture. And the balance is your unspent amount. Okay, this is the variance you have is the money that you're going. Yes, you are having the variance, which is positive, but that is not your money. You're going to refund back. So, okay, the actuals are what from the question here? The actual expenditure. We copy and paste these figures, and we managed to make the actual expenditure of how much. It should give us the total that you have the other side. So we see that from what we have, the actual is equal to what? This. So the variance is this minus this. Remember, expenditure can as well be a favorable or adverse. So if you're getting these figures, you had budgeted to incur this, but you're incurring less. So these ones are favorable. These ones are favorable. The variance you have under expenditure item here, under expenditure items, the variance you have is favorable. So if I sum up still here, you will find that here you have the same. This is the same. Okay? But most times when we are dealing with budget, you're going to find that most of the issues are on expenditure items. There are always no issues with the what? The revenue. Okay, that's what you really were supposed to be done. That is revenue. To you as an entity, you have this money with you. You have this money with you, which is supposed to be what? Utilized. But you have only utilized this. It means that to you as an entity, that is the variance you have here, the difference between this and this. In terms of correction, this is really unfavorable. This is unfavorable.
So my question is, do I have to hint on that in terms of revenue, the variance is unfavorable?
The what?
That in terms of revenue, the variance is unfavorable. Do I have to expound on that and talk about it, or I can just stick to?
No, you don't need the. Maybe if you want, you can always put those things here. You say adverse, say favorable like that. Eh? At times you will see those things. You get, eh?
Yes, I understand. Thank you.
At times you can do what? You can put those things here. My colleague in the chat, you're saying what? Okay. Okay. Any question? So in your exam, this is recommended, the variance to show that it is favorable or adverse. It is actually you can do this one. If you realize that, you may find that part of your expenditure, if expenditure you had budgeted to incur this amount of money, this is what you had budgeted to incur. You incur this, you are saving. Okay, from the cost perspective, we see that you're saving. But if you had budgeted to incur this and you incur more than what you had budgeted, the variance will be what? Adverse or unfavorable. And that's it. That's it. We are done with the number. We are done with the number. I really don't know whether you have a question. I really don't know whether you have a question. So, but we can go ahead and look at anyway, this is you can even go ahead and have the surplus things, surplus stuff, where you are looking at this minus this. But in terms of budget, we don't go for all that to really. But if you want, you can go ahead and have this. You have this. You have this. Let me say total, because it can help. It can help you to track total revenue. In terms of you as an entity, it helps you to track and see whether you are in a surplus position or in a deficit position. Yeah, it helps you to track. We can look at May 2025. I don't know whether you have a question. Whether you have a question from what we have discussed. May 2025. Question 2. May 2025. Question what? Question 2. I am not handling the theory. This was about procurement, which is a good one as well. I'm handling part B, which is taking 13 marks. We are told that basing on the information provided above, we prepare the relevant financial statement that comprise with IPSAS 24. That is presentation of budget information in financial statements. We note that the financial statements of the budgets and the actual amounts are prepared on what? On a comparable basis. When they say comparable basis, it is also something that you really need to know. It is something, because they can ask us a theory here. When they say comparable basis, what do they mean? Mean that we are looking at the same accounting, whatever you're doing as you prepare your budget, the actual and the budget. You are using the same accounting basis. You are using the same classification. You are using the same what? The same classification. Then you are looking at the same reporting period. Same reporting period. Then the same what? The same reporting entity. It is something that you really need to know. Comparable basis. Because if the accounting basis is different, really something can't be comparable. If the classification is different, how you're classifying those items, if it is different, if the reporting period is different, then it is tricky. We are preparing the budget performance, which is the same as what we have handled, but it's a matter of reading the scenario that we have to be in a position to clear the number. So we have this is the scenario where they are telling us that the government of Uganda, through different ministries, departments, and agencies, develops budgets and spends trillions of shillings annually on the provision of goods, services, and works in a bid to execute its mandate of service delivery to citizens. Over the years, various audits and diagnostic studies have, however, indicated that the acquisition, I believe we don't have business on paragraph 1. We really don't have business with paragraph 1 for purposes of our part B. They need to improve the public procurement. We don't have the business here. We don't have a business here. The Ministry of Roads and Infrastructure Development undertakes budgeting and procurement processes annually to execute its mandate of planning, developing, and maintaining economic, efficient, and effective transport and infrastructure systems across the country. For the year ended 30th June 2024, this ministry received and spent funds as indicated below. Okay? We have the approved budget. We have the approved budget and the actual amounts. We have the revenue sources. We have the revenue what? The revenue sources. We have also the expenditure items. The part of the revenue sources, we have the grants from multilateral development partners, transfers from Ministry of Finance. If it is transfer from another entity to our entity, that is part of our revenue. If it is us transferring, that becomes part of the expenditure. Okay, so we have, but the transfers, the transfers we make at times when you're preparing, as you see what we are going to do on Thursday, you realize that for transfers normally comes when you have at times determined the what? The surplus. From the surplus, you go ahead and remove those transfers to other departments, rather to other entities. Okay, so we have the revenue, we have the expenditure. They are telling us a good thing with this number, you can't score 0. Eh? That is a good thing with this. They are telling us on 20th September 2023. Remember, this is your approved budget for the year. This was your approved budget for the year. But they are telling us that on September 2023, when did this year commence? If the year is ending 30th June 2024, it commenced on which date?
It is June, 1st July.
1st July.
First July 2023. But they are telling us that on 20th they are telling us that on 20th September 2023, the ministry secured supplementary what? Start now analyzing critically. The ministry secured supplementary funds worth shillings 400 million as grant from what? From bilateral agency. Okay? The required approvals were obtained and funds were allocated as what? As follows. You have Now you received another money, you received other funds, and you're reallocating. It means that you must do the adjustment. Are we together? You must do
Yes.
adjustment. Remember, you had a revenue source item as what? Bilateral agents. Initially, we had grants. We had money in our budget at the start of the year that was approved by the what? By the relevant authorities. Initially, we had that in our what? In our budget. But during the year, we received another supplementary what? We received supplementary funds. So there will be adjustment of this. This money will increase. Our revenue will increase. But now, this supplementary fund that you received, we see that the entity allocated. It means that now you will need to adjust your expenditure budget. You need to adjust your expenditure budget. These items were already part of our what? Our budget. So since you are allocating more money, it means that also the budget, the initial budget here will increase for these items, that we have here. When you add the percentage, is it 100%? First, because you always need to do that, you need always to confirm by adding, see whether the percentage is 100%, whether the entity allocated all the money. When you add, is it 100?
Yes, it's 100.
So it is 100. So it means that whatever item is not here, that we have under our expenditure item, the budget will not be adjusted. The budget will not be adjusted. For example, here we have the human resource. The expenditure item, we have the human resource. But here we don't have human what? Human resource. So it means that human resource amount will not be adjusted. Okay, next. On the 30th September 2023, that is still within our period, additional supplementary funds, shillings how much? We have another amount of money, shillings 150 million were obtained from USMID program support roads and bridges construction as per the terms and conditions of the grant. Do we have this revenue source? We don't have. When you look at the revenue sources, you realize that we don't have the line item that is grant from this USMID. We don't have that. So you will create another line. As you deal with your revenue sources. That will be revenue from what? From USMID program. Revenue from this entity. Okay. So you create another line. It is always line by line. Okay. So you will create that. It means that in your initial budget, in your approved budget, you have 0 when it comes to grant from USMID. Initial approved budget will be 0, then adjustment. On your adjustments where you have supplementary fund, where you put your supplementary funds. But the money we received, you can see that still that money was allocated. If you add, does it give us this figure? If you add these amounts, do we get this? If we add these figures, are you getting 150?
Yes.
Yes. 150.
Okay. So it means that still you will need to adjust. It means that still you need to adjust your expenditure items. These ones will increase, but they are telling you that there are some varmints. There are some varmints totaling shillings 26 million were also made. Do you know varmints reallocation? Varmints, it's like you're transferring money from one from one expenditure item to another what? To another budget item. That is varmint. If you had allocated a certain amount of money in one budget item, you transfer that money from that budget item to another budget item.
I beg your pardon, environment.
Environment, it's like you're doing reallocation. If you had budgeted 180 108 under this expenditure item, you reallocate, like you transfer, you remove that money from this budget item to another budget item within the same entity. That is environment. Just we reallocate, we transfer money from one budget item, from one expenditure item to another expenditure item. It really doesn't affect your overall budget because you had allocated the money in one of your expenditure items and you're transferring it to another. So it reduces the amount for one budget item, for one expenditure item, and increases the amount for your other budget item. So it's really the reallocation of money from one, let's say one department within an entity to another department within an entity. If you're looking at departments, so it means that it is from one department to another department. Is it a procurement department? Is it a finance department? What was the budget of your finance department? What was the budget for the procurement department? If you realize that maybe along the way, the procurement, we had allocated too much money to the procurement department, then we remove part of that money from the procurement department, then we allocate it to other departments. What you're doing is varmint. What you're doing is varmint, as long as it is within the entity. Whatever you are doing, the reallocation, as long as it is within the entity, then that is varmint. But if what you're doing involves the other entities, then that is not varmint. That is a transfer. That is a transfer. That is a transfer to other what? To other entities, like Ministry of Finance transferring money to Ministry of Agriculture. That is not varmint. Varmint must be within the entity. Reallocation of the money within the entity. Okay? Patricia, is it okay?
Yes, it's okay. Thank you very much.
So the varmint was 26 million. The totaling 26 million were allocated as follows. Please take note. Part of the 26, we are saying that 12 million is going to roads. You need to know where this money is going and where is it coming from. Remember, it is within the entity. The entity had roads and bridges development item. Okay, so it is this 12 million is being reallocated to to roads and bridges development. But it is coming from which department or which expenditure item? From the what? From the general supplies and services. So it means that we will need to reduce the general supplies and services by 12 million. Then we increase the roads and bridges development by 12 million. Then shillings 8 million to professional services, but is coming from where? From travel and transport. So we reduce the travel and transport amount by 8 and increase the professional service amount by 8 million. Then finally, we have 6 million reallocated to general supplies and services, but is coming from legal services. So we reduce the legal service amount by 6 million and increase the general supplies and the services by 16 million. If you add the 12 plus 8 plus 6, are you getting 26? Yes, because 12 plus 8, you get 20 plus 6, that is 26. And that's it. So once you understand all of this, you see that the number becomes very easy. The number becomes very, very, very easy. So what you're really doing is this. This is ministry. This is a ministry. Ministry of what? Ministry of roads. This we are dealing with what? December. This was December, May 2025. May 2025. Question. May 2025. Question what? Question. Was it question 3? Question 2?
Question 2.
Part B. So this is ministry of roads and the infrastructure developments. Statement of budget performance. At times you will see words like statement of appropriation. Please don't be confused. For the year ended 30th June 2024. So I have my details. I have my initial approved budget. Then I have my adjustments or the supplementary amounts, or you will see the word supplementary budget. But let's use the word adjustments. Then you have the final budget. The final budget, you have the actual amounts, not actual budget. Then you have the variance. Okay. Okay. So we have the revenue sources. And the revenue sources, you have seen that we have grants. Start with what we had initially. Grants from multilateral development, development partners. You have the transfers from ministry of finance, you have the grants from bilateral agencies. But you saw from your case study that we have another what? Another money coming from what? From another entity. Initially, we had only 3 sources, but you saw somewhere from where? But here, we have another money coming from USMID. So that one was not clearly indicated. So we can put it here line by line. This is money or grant from USMID. Okay, then you have, I will have the total revenue. Then from there, you look at the expenditure items. Okay, so how much we can first just capture those marks. Already we have the initial budget, 300 to, sorry, 3,000, 2,000, 5,000. I'm picking this from our question, guys. I'm picking this from our question. And this is our question. This is where I am picking these figures. You just first capture those easy marks. First capture those easy marks. Then here, and then here, here we had nothing. Then total revenue, I can sum up. Then expenditure, I have 3,100, then 2,000, then 1,100, then 800, 700, then 2,300, then total expenditure. Here, this. Okay. So that is your total expenditure, that, then our total revenue, that. Then we can do some adjustments. If you look at your revenue, do you need to adjust the maritrato, the grant from maritrato development? When you see what the money we received, was what? We have supplementary funds, 400. This was coming from where? Grant from bilateral agents. So adjust that. You go and adjust that. Grant from bilateral agency. This is bilateral agency. So I am increasing. The money is coming. The money has come. It was what? 400 million. Do we have another money coming in? Let's see. Yes, on the 30th September, we received some additional supplementary funds, 150. This was obtained from USMID program. So we can put it here. That is what? That is here, 150. So it means that our final budget, because we don't have any other money, we are simply getting the what? The initial approved budget plus the adjustments. Okay, here it is plus. Okay, for revenue it will always be a plus, because really how can it be a minus? It's only on expenditure where the adjustment can actually be a minus. At times you may need to adjust the approved budget. But do you really adjust the approved budget? Because once it is approved, it is approved. You can only do you can only do the requirements or the transfers. Now the adjustments, really you need to pay attention and even do the workings where necessary, because you may not do, examiner may really not know where the figures are coming from. Because you see, we have a lot of things in our case study. We have a lot of things in our case study. One, we needed to adjust these items. Even here, we need to do the adjustment. Even here, we needed to do the adjustment. So you can have the working. You can have the working. The working regarding these things, these expenditure items, especially those expenditure items that are affected. So in my workings, I needed to have roads and bridges development, legal services, professional services, transport and rather travel and transport, general supplies. These ones must be there. Let me create a working here. For these things, I create a working. Yeah? I can create my workings. I say this is my working one. My working one is really doing the adjustments. We are doing the adjustments on what? On some expenditure items. So I will have, as I do the adjustments, I will have, it really depends on you, how you want to do this, because our presentation may differ. But I can have the details here. I put the details. I put here those expenditure items like roads and bridges in column form. Roads and bridges. Then you have roads and bridges development. Then you have the legal service. Then you have the professional service. Then we have the general supplies and services. This is roads and bridges development. Okay, so you can have that. You can have that. You can have that. Do we have any other, when you look at, because you may find that maybe, let me see. Have we catered for all? This is adjustment one that we are going to make. Then we are going to make adjustment. Already we have roads and development. In our column, do we have professional services? Yes. We have the column for professional service already. We have the column for professional service. We have already the column for general supplies. That is okay. Even these ones regarding environments, we already have. So we don't need to add another column. We don't need to add the human resource column because there is no adjustment. Okay.
What about travel and transport?
Don't we have? It is here.
No.
Hey. We can create that travel and what? It is travel and what? Travel and
transport.
So you can have that. It will be affected. Yeah? We need to adjust that. Okay. Then as you adjust as you adjust, remember we are basically focusing on adjustment, so it means that you need really the amounts to put on your adjustment column. Because already these items are there, you get, we have these items here. Basically, we need the amounts to put here. We are looking for the amounts to put here. That's what we are trying to do. So, first of all, we are going to do adjustments because of the money received from money received from our supplementary what? Our supplementary funds. We have supplementary funds. We have funds from. We are allocating grants from what? Grants from bilateral agencies. And we are allocating how much? 400 million. We are allocating 400 million. If you want, you can create the amount, the column for total allocation, but really that is wasted of time. Shilling is in the middle. So when it comes to maybe in your workings, because you're using a pen, in your workings, you can show the examiner how you're getting the figure. When we received the money from bilateral what? We received the money from our bilateral agents. It is 400 million, and we are in a position to allocate. Roads and bridges is taking 64. So get 64, 400. How much do you get? Here, when you're doing, maybe you can show the examiner how you're getting it. 64 times what? Times 400, and you get the amount, which is how much? But for me, I'm not going to do that. But for you, you do it. This is 64% to know where these things are coming from. 64% times 400. What about legal service? How much? Okay, what percent? A legal service, we are the entity allocated how much? What percent? 8.
8.
8. So we get 8% times the 400. So here we are getting 8% times 400. Then professional, how much was what percent? 11? Was it 11? Yes, 11. 11%. So we get here 11% times 400. Then general supplies and services. What percent?
13%.
13%. So we get 13% times 400. Okay. Then here travel and transport. It was what?
4%.
So I get 4% times 400. That's what I get. If you add the total allocation, you will get 400. You get 400, the total. Okay, so next it was this grant from what? Grant from USMID. We are allocating 150. We are allocating 150 million to which entity, rather to which budget items, It is roads and bridges. Roads and bridges, we are allocating 108. So we go to the column for roads and bridges. We put 108. Did we allocate anything? Did the entity allocate anything to legal service? When you look at the question, no, so you don't need to put anything. You just put 30 under the column of professional and 12 under the column of general supplies. So let's do that. Here, Professional service, 30, then general supplies, 12. Do we have any other adjustments to be made? Another adjustment is regarding environment. So we are doing environment. Here we can do reallocation, that is environment, and we are doing the environment worth this. Just this column, I don't need you, for you don't waste time in an exam putting this column. That will be taking your time. Don't put it. Environment. We are doing reallocation. From one budget line to another. So where the money is coming from, we reduce. Where it is going, we add. Do we have money that is going to roads and bridges? Let's read and see. Do we have? Okay, you can read one by one, handle one by one. You have the 12 million from that is we are allocating it to roads and bridges. So under the column of roads and bridges, you are having 12. You can first note somewhere, or you can first write that figure. Where it is coming from and where it is going. It is coming from what? General supplies. So what I'm going to do, under the column of roads and bridges, I put the 12 as an addition, then general supplies, I remove the 12. Where it is coming from, it's a deduction. Where it is going, it's a plus. Next. Next is what?
Professional fees.
Next is professional fee. Professional fee is receiving 80 million from travel.
General supply.
From travel and
No.
Travel and transport. So let me do this. 8. I can do it from here. Because it is still a environment. So you can create another. Where is it coming from? Where it is here?
From travel and transport.
It is coming from travel. How much? 8.
8.
Then this is going to its budget, to its expense item.
Professional fees. Yes.
So here I put 8. Then lastly,
we have from legal services going to general supplies, 6 million.
Are you sure? Don't make mistakes.
Yes.
Yes, that is true. You have 6 million into general supplies that is coming from legal service. So under the column of legal service, we put 6 million as a negative. So legal service is here, 6 million. Then this is going to general. So finally, you will have, as I said, this column is not necessary. Let me remove it to avoid confusing you. Is really not necessary. What you really need is the total adjustment. The total adjustments. So the total adjustments, you simply sum up. If it is a negative on your calculator, put that figure as negative. But for me, since I am using my machine here, it becomes really very easy. So these are the total adjustments that I must make. I will go to the column of adjustments and I put the column where there is roads and bridges here. Roads and bridges, I put this figure. I put this what? I put this figure. Then where there is legal services, I put 26. Where there is human resource, we have not made any adjustment. Where there is professional services, I put 82. Where there is transport and travel and transport, it was how much? The total adjustment? 8. What about the last one is what? General supplies, the total adjustment is 58. Then you get the total. You get this plus this. Okay. Then the actuals, we pick the actuals from the question, the actual expenditure. You have already the actual expenditure. From the question, you have the actual what? You have the actual expenditure from the question. The actual expenditure is here. So you copy these figures and put them the other side. So we have to put them here because this is the column for actuals. This is the column for actuals. So make sure that you copy the actuals very well. This is what? 2, 3, 4, 7, 5, 3. Then the other one is 195.61. So that is our column. That is total what? Total actual amount spent. That is our total amount spent. Then you can get the variance by simply getting what you budgeted. You budgeted this, but you incurred this. Okay? So please, the figures, don't put them as negatives. For you, the variance column, don't put a figure as negative. No. Put the figure, then put a comment that this is, if let's say here you are getting, if let's say you see that we were planning to incur this, but the entity incurred this is lower. So this is favorable. Just what is appropriate is to know that the figure, the difference is favorable or adverse. So we have basically what? We have all these ones as favorable because the entity incurred less compared to what they had budgeted. So here, this was the actual revenue, this was the actual revenue, this was the actual revenue. But remember, this is before adjustment. This is before what? Before any adjustment, but we made some adjustments, which will also affect the actual. You received the money. This was before. The actual you are seeing there is before the adjustment. Let's come here. This is 3,000. This is 2,000. Now I want I want you to pay attention here. Here, when you go back to the question, the grants from bilateral agents, the actual in the question is what? Are you saying that the actual is 5,000 in the question, but don't write 5,000? Don't. This 400 was not part, so we can make this one to be 5. I really don't know whether you are taking my argument. Okay? Even here, we didn't have, but we received this money. So you put it here as your actual. You received this 400, you even received this 150. So it must increase your actual. You must increase your actual. So this is the money you received and you're going to spend. You're going to spend. Guys, we are done. We are done. The variance for revenue really has no issue. Okay. Any question? We are done. I really don't know whether you have a question. Here are the differences, the surplus or the deficit. The surplus or the deficit. This is really just to do the reconciliation under the column of variance. Avoid saying it is negative. No. Put the variance, ask yourself, is it adverse or favorable? So I am done. I think that's really enough for today. But don't fear these numbers about budget. Are you saying that they are aren't you saying that they are easy?
Yes, they are doable.
Yes,
interpretation.
The interpretation bit of it. And at times we miss out on these marks. Just you look at the number and you really fear. Like the way it is, and you fear that how am I going to handle? For example, look at, as we conclude in these last 13 minutes, look at November 2023. It's still the current November 2023. As we finalize, how many numbers have we done so far?
3. 2, 3. 3.
They are 3. Okay. So when you look at November, are you seeing this question? Question 2.
But it is November 20 what?
November 2023.
Okay.
November 2023. Let me open that is 2023. Question November 2023. Question 2. You have to, even it was not carrying too many marks, the computation was just 5 marks. The computation was only 5 marks. Now, the computation was about you preparing the budget performance report, showing the percentage of budget released, budget spent, and the releases spent for the year. Now, when you look at the question, you really have everything. That's why the marks are not many, but the student will fear. The student will fear. Just all you need, examiner has given you the budget performance. This is the annual budget performance. Just copy, redraft again. But now, for this question, you are not doing like what we have been doing. No. Here, the budget performance that you need, is to show you the budget released, the budget spent, and the releases spent. Just have columns for those what? For these categories. Have the column for details, then have the column for the budget released, budget spent, and releases spent. And how are you going to get those things? It is from here. It is from here. So you have the details for what? For this source, for these budget items, these ones. Then you have the column for the question. Now, how are you going to get the budget spent, the budget release, the release spent? This is what you're going to do. November 2023. Question 2B. I am not going to do everything, just to illustrate. Your budget performance will have your budget lines, budget items. You have your budget items. Your budget items, like the way they are given in an example, just copy and put them here. The revenue and the expenditure items, put them here. Then create a column for the percentage of what? Budget release. Then you create a column for create a percentage for, create the column for the percentage of budget spent. Then create a column for the percentage of releases spent. For me, I will just show you the formula, then for you will create. Because here the issue is that there are 5 marks, but taking many minutes. So when you're getting budget release, this is the formula. This is the formula. It will be equal to. This will be equal to. You're getting the released. The released amount, because we have that amount in the question. You have the amount in the question. You have the approved budget and what was released, but released by the end of the year. As I had said that the government may approve your budget, the authority may approve the budget, the parliament may approve the budget, but what they release to you, it doesn't mean that the money is not there. The money is there, but just the releases may be different. What you actually receive, what the accountant general allocates to your accounting officer may not be the total of what was approved. That one happens. That one really happens. Okay? So they released out of what was approved, they released these amounts of money. So for you, as you're getting the percentage of budget released, it's easy. Common sense is that you're getting the budget released over the budget approved. It is the budget released over budget approved, over approved budget, over approved budget amount. Then the answer you get multiplied by 100. That's how you are going to get your answers. That's how you're going to get your answers. Is that clear? Even here, it's the actual. It's the actual what? The the actual spent amount divided by, now if it is budget spent, of course you're dividing by the budget. You're still looking at the budget. You look at the approved budget. And then the answer you get multiplied by 100. You don't, the budget spent, you don't really focus on the releases. No, as you're getting the budget spent, as I said that they approved your budget, that's the money you are supposed to get. So if it is the budget spent, out of what we approved as the budget, how much did you spend? So you can't rely on the releases. No. If it is a budget spent, you can't rely on the releases. No. Okay, you can't say that I get because I received the less compared to the budget, I should get the actual spent over the budget release. No. You can't do that. Here for budget releases, it will be the actual amount spent, over the budget releases. That one you are going to look at the budget releases, because here with with releases spent, you are spending what you actually received. It's not that you're spending based on the budget. You're spending the money you received. That's why here you are not relying on the what? You are not relying on the approved budget, but you're relying on the budget released. Out of the what we approved, there is the amount that was the amount. But if I use budget released, it really makes it can make you to be confused. But I believe you understand. You get the release, the amount here. But let me leave it there. I hope you still understand what I'm meaning. Because you see, you have the column. Let me just first multiply by 100. You have the column for all these things that I'm talking about. You have the column. You have these columns for this thing that I'm talking about. If you have the approved, you have the amount released, you have the amount spent. So you simply substitute. If let's say you're dealing with recurrent wage and wage and non-wage, come here where you have. Let me do only one thing, and we call it again. You have what? You have what? The first one is what? You have the recurrent. So recurrent. This is recurrent. So if it is recurrent, I have wage and non-wage. So what I'm going to do for me to get the budget release, the percentage of budget release, I ask myself here. I ask myself what was the amount released? What was the amount released under the line or under the wage line? What was the amount released? Are you seeing 1.57? You get 1.57, 1.57, then divided by what was approved, 1.57, then times 100. For me, I can convert these ones direct to percentage. You do the same for budget spent. The percentage is what? Budget spent. We are saying that you look at the actual amount spent, actual amount if it comes to wage, Actual amount spent is 1.57 divided by the budget. Here we are getting still 1.2. It is still 100%. What about release? Even 100%, because they are the same. But when you look at non-wage, it will be what? The budget released is how much? The amount released, it was this. So get this figure. Get what was released divided by what was approved. What was released is this divided by what was approved. What was approved is this. Here the number is easy but takes time. Those 5 months.
72.
Then times what you get is this. It is still 100. So the percentage is this. The percentage. Then you do the same here. Budget spent. The actual amount spent is how much? The actual amount spent. Last column. Last column, we have the actual amount spent. Is here. I think it will be the same. So you do this one by one. You do this one by one. Okay, it is still the same. It is still the same. Then here you are looking at the actual amount spent, which is really this. Which is this actual amount spent over the actual amount released, which will be 100%. But here it will not be 100%, this line. But that's what you keep on doing for each line item. You do that line by what? Line by line. You do that line by line. That was the question. That was the question. I hope the session has added value to you. The theory, like what causes unspent balances, you can really, even if you have not studied this, you can think about it. Most times it depends on the workers. If you don't have enough workers to deliver, if you lack skilled manpower, the capacity constraint can affect you. You can end up not spending money. You can end up, because you don't have people to do work, the money remains like that. You are not spending, people are not doing the work. Others, you find that it could be issued from the procurement. They are delaying to, there is a delayed process. And you realize that by the end of the financial year, probably we procured some, we ordered, but the other supplier has not yet delivered, and maybe we are paying on what? At the time the supplier delivers. So you may find that you did the order, but you have not yet You have not yet spent the money. So that will cause unspent balances at the end of the financial year. You find that when we look at your records, you have the money unspent, but you have not yet paid this because the procurement process has not yet been completed. So the delayed procurement process can cause these unspent balances. These natural disasters that you see, these pandemics that you see, can as well put everything on hold. Even if it is to do activity you can't do because of COVID-19, you can't do because of Ebola, you can't do because of these other pandemics or other the other natural disasters, floods, all that. It can affect you because nothing is taking place. And because there is nothing taking place, you're not incurring that money. And even the year can end and you still have some balance. Even when it comes to releases of funds, can affect you. The financial year is ending in June. The ministry has just released the money in June. Can you really complete all the processes? At times, you may not complete all the processes to spend that money. So the delay in the release of the funds can also cause unspent balances. What else? What else you are going to add more? You are going to add more. So guys, that's it for now. In your free time, because I really can't do this number now, in your free time, try the budget question. Try this budget question in your free time. I'm not going to do it now. Try September 2022 question. You try it. Let me open it for you here, but you are going to try it in your free time. You try it in your free time. You try it. Are you seeing the paper?
Yes.
This is the question 4. Question 4, part C. Question 4, part C. I want you to try that number in your free time. Because we have discussed everything. We have discussed everything. Even if the appropriation is statement of budget, budget performance. The areas of revenue is what we discussed. Is what we discussed. So you try, because when I do all for you, your mind can't really think. But in case you meet a challenge, as you do this, in case you meet a challenge, you let me know, but you do in your free time. Are you going to try it out?
Yes.
Yes.
Just that when you are doing that statement of arrears, in some books, when you're doing this statement of arrears, in some books, you see at the start of the year, you have the amount that was not collected. Are you seeing that? So you may find that there is another column created, because B, C is the amount you collected. You may find that there is an amount, okay, there is another column for what the entity collected specifically on the opening balance. So you find that there is a category of out of what we had as outstanding, what did we collect? Not mixing the one we invoiced during the year and collected. But really this approach still works, because what you are collecting, take note that what you are collecting here can be part of what you had at the start of the year, and what you invoiced at the what you invoiced during the year. So it shouldn't confuse you. It shouldn't confuse you. Just ask yourself, do you have any correction during the year? And if you have the correction during the year, that correction, is it for the amount that was outstanding at the start of the year, or it was amount that you invoiced during the year? You can add them too. You can add the total to get the total correction. But please at times, you guys, you don't do these numbers in your own on your own. You wait for exam and you start struggling. Eh? You see, for me, I'm doing as I discuss it, it's like I'm doing. It's not you doing. For me, I have done how many numbers so far? I have done this number. So for you, I can tell you the discussion is different from you practicing. When we are discussing everything is easy. When we are discussing everything is easy. There is another budget number I have. I don't recall the year, but it must be of recent. Or it was December or which year, but there was a budget number. You also go through it. I don't know whether I have downloaded that number. Yes, it is here. It is here, December 2025. Also, you note that among the numbers that you're going to practice, you also note December 2025. It was carrying what? It was carrying 15 marks among the numbers you're going to practice to do the budget test.
Question 2, question 3.
December
2025, question what?
Question 2.
Okay.
December 2025, question 2. You go through it. Just try to read the language and see whether you can cook something. Maybe if you get confused, look at the guide. If the guide is not clear, then you can let me know and we discuss one time. But from my end, I'm done with budget. If you see there is a need to discuss question 2, this number and the other number of September, we'll create one day and discuss those numbers.